Hi everyone. In this video, I'm going to go through the Trade Desk's most recent quarterly conference call, which was held on November 9th, 2022, to try and answer, what's going on with the Trade Desk stock. The company, fundamentally performed really well in its most recent quarter compared to other ad companies. So let's go through the call. Let's try and determine what's going on with the Trade Desk, why it did better than other advertising companies. So, going here with Jeff Green, the co founder and chairman, in the conference call, saying the trade desk posted another very strong quarter with revenue growth up 31% year over year. We continue to gain market share as advertisers embrace the precision and relevance of data driven advertising on the open internet via our platform. And that is true. I follow many stocks that are reliant on advertising revenue, like Meta Platforms, Alphabet, Snapchat, Pinterest, and more. And many of them reported way lower growth than that. In fact, Meta was negative, I think, and there was others that were close to being negative year over year in terms of revenue growth. And so the fact that the trade desk posted 31% revenue growth in an industry that was experiencing so many headwinds macroeconomically, that was impressive. So moving on, so just one more data point on the market overall and how we are performing. Group M predicted worldwide advertising revenue will increase by 8.4% in 2022, and we are growing at more than three times that rate, which is true, right? 8.4% is, almost just a fourth of the 31% that the trade desk is growing, and that's big news to be growing at such a multiple of the market overall. And the trade desk is not that small of a company, so that's really good for uh, investors following the trade desk here. And so let's continue on here. While CTV, which stands for Connected TV, may be the biggest force of change for the open internet, perhaps retail media and its accompanying data is a close second. Yeah, I mean, I agree. Retail media is going through a major change, especially if you look at overseas markets. There's a lot of media associated with retail now. You have a lot of live TV selling events, kind of like if you in the US, if you're familiar with the home shopping network, that's kind of the trend that's evolving overseas in terms of e-commerce sites. So you'll have like e-commerce sites that have a live video feed with people trying on clothes and jewelry and all of that, and live media, and that's an opportunity for advertisers to jump in there and show ads in that retail media kind of landscape. So moving on here, the Trade Desk CEO is going to quote something that Procter and Gamble said, and Procter and Gamble, of course, is one of the world's largest and most progressive advertisers. The CFO of Procter and Gamble said, "It's difficult to describe media sufficiency in dollars, especially when we're actively shifting our spending from linear, non-targeted TV into programmatic into digital spend. That's a lot more targeted and a lot more precise in terms of delivering reach and quality of reach where we need it." And that's a major trend that, if you've been following my channel, I've been highlighting throughout. And it's, when you're going from the traditional cable and satellite TV advertising to connected TV advertising, you have more of a capability to target and precise advertising than you would in the traditional models, right? This wasn't the case so much previously in the legacy models as it is now, and so marketers are more interested in that. Marketers are interested in that targeting aspect, especially now that Apple has implemented some privacy policy changes on its electronic devices that makes it more difficult for companies like Meta Platforms, Pinterest, Twitter, and Snapchat to deliver more targeted advertising. So those social media companies are losing their ability to deliver targeted advertising. So that's going to favor the connected TV advertisers more so in favor of the social media advertisers because their ability vis-a-vis targeting with social media companies just relatively increased. The world's most sophisticated advertisers understand that as they get more pressure from their CFOs to demonstrate the value and return of every advertising dollar, one of the best places to do that is on the Trade Desk platform. They provide objective, transparent measurement. They provide precision, and relevance. They allow advertisers to optimize based on real-time performance and provide access to the world's most advanced data marketplace, including many of the world's biggest retailers. So this flexibility to go in, to go out, to increase, to decrease their marketing spend is a big advantage. If you compare it to legacy models, um, advertisers were previously forced to decide how much they're going to spend on a given program in a given season with a specific cable media channel ahead of time. And so they didn't have that option to increase or decrease midway through the campaign. They had to make those decisions on a seasonal basis rather than a real time where they have that option with connected TV. If the return on investment is looking really good, they can ramp up the spending. If it's not looking good, they can decrease that. And that optionality is really important to marketers, especially nowadays. Okay, so moving on to Blake Grayson, the CFO of the Trade Desk. He highlighted that over the trailing 12 months, free cash flow of nearly 500 million is up 53% from a year ago. That's phenomenal growth in free cash flow year over year. Geographically, he notes that North America represented about 90% of their revenue and international only represented about 10% in Q3. So that's an opportunity for the company to grow internationally. While still small compared to CTV in North America, we're encouraged to see CTV in Europe and Southeast Asia rapidly increase year over year. That's good news for the Trade Desk as well. And I'll finish with the Trade Desk's outlook for the fourth quarter. They estimate that fourth quarter revenue to be at least 490, which would represent growth of 24% on a year over year basis. Again, even though it's down from the 31% in their previous quarter, fourth quarter growth of 24%, if it comes to fruition, would be phenomenal growth again, considering that the advertising industry overall is only growing by roughly 8%. So amid those macroeconomic headwinds, the Trade Desk is delivering above average growth by a wide margin, right? By more than 3x the amount of the advertising industry overall. All right, so I hope this video has illuminated you on, some of the forces, some of what's going on with the Trade Desk stock. Okay, so that's all I've got for this video. Thank you for watching, and I'll see you next time. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.